Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to exit highly appreciated assets, defer capital gains taxes, eliminate the need for the 1031 exchange, so you can create and preserve more wealth or help your clients, friends, and families do the same. My name is Brett Swartz, and each and every episode, I'm joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. We're also streaming expert CRE secrets as well. So everyone out there on our YouTube channels there, we appreciate you checking us out. I'm excited about our next guest. He's out of the great state of Minnesota. He began investing in real estate in 2008 and has purchased and renovated apartments, single-family houses, mobile home parks, and even a ski resort. He's the owner of Cretan Construction, and is a licensed general contractor. He's also the host of the podcast Pillars of Wealth Creation, which is a bi-weekly podcast teaching others how to operate successful businesses and so much more. Please welcome to the show with me, Todd Dexheimer. Todd, how are we doing?
Good, Brett. Thanks for having me on. Appreciate it.
Yeah, absolutely. For our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah. So I was a high school teacher. That was my trade of choice out of high school, college, and very quickly realized that that wasn't going to be for me for the rest of my life. So transitioned through just lots of discovery, honestly, into the entrepreneur journey. Started flipping houses and buying rentals. I actually didn't want to flip houses. That was not my goal. My goal was just to buy a bunch of rentals. I wanted to buy apartment buildings. I heard a guy, David Lindahl, speak at a meetup, and I'm like, oh, that's exactly what I want to do. I was reading all these books about apartments, but I didn't know how to get into it. So I started buying single families, duplexes, ran out of money very quickly because I was a teacher. Teachers don't make a lot of money. And my wife was also working at the time, but, making better than me, but not great money either. So we ran out of money quickly. And so I started flipping houses. And so I would flip. It wasn't a science. It wasn't like this is exactly what we're doing, but flip about three houses and then usually keep one, either single family, duplex, fourplex, something like that. And did that for many years. Flipped, well over 100 properties, bought sold well over 100 properties. And then I think it was about 2015, transitioned. I looked at my portfolio. I had a business partner at the flipping days too, and him and I split and looked at my portfolio and said, what do I want to do? Do I want to continue to flip, or do I want to buy and build my rental portfolio? And financially, it made way more sense to buy and build my rental portfolio. So that's what I did. I started focusing on apartment buildings and was buying smaller apartments, and then graduated up to what we're doing right now, which is 100 plus unit apartment buildings, value add. And we also do some other stuff. We've got some assisted living, we've got some retail, industrial, but its bread and butter is multifamily apartment buildings.
Got it. Absolutely amazing. I love it. We're going to dive into Todd's story here even more, but we're actually talking about navigating real estate highs and lows. You can learn more about Todd Dexheimer by going to enduruscapital.com. It's ENDURUS capital.com. Todd, before we dive into the topic at hand, I do want to take one other step back. I believe we've all been given certain gifts. These gifts have been given to us to be a blessing and help to others. What would you say is your one or two gifts that you believe you were given, and how does it help how you help and bless people today?
Man, that's I guess that's a tough one. You never like look at yourself, and I don't know. At least I don't. But I think I've been given a couple of gifts. I feel like I've got the desire and ability to be able to teach. And so obviously I was a teacher, but now I teach more on the financial freedom through real estate type journey. So I think that's a big one. I enjoy teaching. I've got a podcast, Pillars of Wealth Creation. We talk a lot about just creating financial freedom and creating awareness, and so that's definitely a big passion of mine, and continue to try to get that out to people who are in high need of that type of learning. One of my first tenants was a Section 8 tenant, didn't want to be Section 8, and probably likely, I haven't kept track with her, but likely still to this day, she's Section 8 just because she doesn't have any of that financial knowledge. So that's been a passion of mine. Um, Boy, and then I guess another gift is probably just the ability and gift to be able to talk and meet with whoever, anybody really. I'm able to hold a conversation with most people. I wouldn't call myself naturally an extrovert, but um, it's definitely been a gift of mine is being able to talk with
Got it.
really anybody.
Awesome. Connecting with people and desire and ability to teach. Love it. With that in hand, let's dive into navigating your real estate highs and lows. So, Todd, what's the number one secret to navigating, especially these changing markets with interest rates and such, and making sure that you're, doing this in a wise way?
Yeah, I think really honestly, like this comes down to mindset, and it comes down to being able to have kind of almost an inner peace upon yourself and call it what you want. For me, it's a faith. It's faith in God, and it's belief in that things are going to happen in life. Like there's going to be tough times. There's going to be amazing times, but you've kind of got to keep a level head the entire time, right? So don't let the highs get you so high and so excited that you're out there spending a bunch of money, you're partying, you're just being frivolous, like just going everywhere, right? Don't let those exciting times make you forget that there are also times of challenge that are likely coming. Um, that probably have already happened, right? You've already had times of challenge. Then you have the really good times, and a lot of people forget about those, and they forget about the bad times. And then when the bad times happen, they're just not prepared, and they don't understand why it's happening, and they start blaming people or other things or circumstances or whatever like that. So just keeping a really level head about yourself, um, staying humble. I think that those are good navigating principles, at least for me.
Yeah, I like that. Yeah, so don't let the highs get too high and the lows too low. Level head, and more so, don't let the exciting times leave you unprepared for the tough times. I think Jim Rohn says it well, right? Those who are not planting in the winter, aren't really going to harvest in the spring or summer. It's really what the Bible says, right? Don't you sow, you reap what you sow. But he says it well. And there's a cool book called The Seasons of Life, and he breaks it down. It's pretty cool. It's like short reads, one of my favorite reads, but it breaks it down. That kind of concept what you're talking about. So that's number one secret. So what's the number two secret to navigating the real estate highs and lows in today's marketplace?
Surround yourself with people, right? Surround yourself with people that are going to be supportive of you and both the good and the bad. So mentors, right? You need to have good mentors that probably have gone through it would be really good. People that have had some crazy stuff happen to them is always a great mentor to have. Um, and even mentors can be books as well. So I like reading books that have had like the authors had crazy stuff happen to them. You like I think of the book Shoe Dog by Phil Knight. He talks about his story, and I mean, he's just got beaten down time after time after time after time, and yet we all know the success story of Nike. We don't know the failure story of Nike unless you've read that book. So yeah, just look, surround yourself with people that are successful, but have had their fair share of lumps and bruises along the way, which most people that are successful, by the way, have. So I think that's huge.
Absolutely. I think that makes a lot of sense. Surround yourself with great people, but also people who've been through this firestorms of life, right? And have persevered. And I mean, I think that's so important, right? The people that we look up most to are those that we can relate to in the sense that they've been through a similar struggle. So that helps us to believe that we could also persevere through those challenges. So cool. Okay, so that's number two. What would you say the next one is, if there's a third one to navigating real estate highs and lows?
Um, Boy, I mean, I've probably already covered them, right, with the mindset. But I think we I briefly hit on just being prepared. And so that would be number three. Just be prepared. Look, understand that good times happen, bad times happen. So it doesn't mean you need to hide. It mean you need to not take risks. Take the risks, but understand what the challenges of those risks, what they can present to you, and be willing to, you know, be be understanding of those risks and be willing to take those risks on or don't take them. Um, so yeah, prepare yourself. And I think really you think you can't, again, you can't stop yourself from moving forward because we could always think about all the bad things that could happen. And if we think about all the bad things that could happen, we just never will do anything. Right. But we should think about the bad things that could happen and how can we mitigate against those bad things taking us down completely. So like in real estate, for instance, look, if I'm going to buy this piece of property that's a value add multifamily deal, and some of the risks are, look, we might not get our rents, the construction costs can go up X, Y, and Z. What are we going to do to mitigate those? So we put a lot more money in our reserve budget. So instead of having $200,000 reserve budget, it's a $600,000 reserve budget. Instead of buying it at 10 million, we buy it at 9 million. Instead of financing it at 80% loan to value, we finance it at 60% loan to value. Those types of things. We're just saying, hey, it's still not perfect. Things can still go wrong. We still could end up losing the property if we do things terribly, but at least we set ourselves up for success by doing these three big things that help us navigate those rough waters that could happen.
Yeah, I think I have a framework for that. And tell me what you think about this, Todd. I call it the cash flow with the tax flow with the debt flow. Like most of us, we
Mm.
focus our mindset when we think about finances. The most obvious one is cash flow, right? It's the box in between. I put money with Todd into a multifamily project. It's going to reduce 6 to 8% cash on cash return, a
Yeah,
15% IRR, maybe 18% on average over a 20-year, 5-year term, right? And maybe double in 5 years. It's like the cash flow, the returns, right? The
yeah,
appreciation. The other side is the tax flow, and there's some mindset on that. 1031 exchanges, right? And then you have cost seg to offset some of the cash flow.
yeah,
We'll talk about a little strategy we have here in a second that I think you might find interesting as well. But the one that I think we took for granted was the debt flow, right? The debt flow we took for granted for
yeah,
too many years because it was so cheap. Debt was so affordable and so attainable, and now it's shifted. And so you're seeing capital calls, you're seeing people that are, the ship is sinking, and my analogy I'm using for this is if you're going to set off from New York and you're going to head over to England on a boat, right? And we have a couple of years to get there. Well, the debt and these boats were actually very sturdy and strong and weighed well, and the occupancies are doing pretty good. Yeah, insurance costs has gone up. Yeah, with some challenges here and there, but all of a sudden you're getting hit with a torpedo, which is or a cannon, if you will. A torpedo will blow it all up.
sure.
And
Yeah,
there's water that's just flowing in as the debt is sinking the ship, and you got to get through this thing in the next couple of years. My
yeah,
point of all this is you've got to look at strategies and ways to prepare for that can match and mirror these
yeah,
three strategies. And oftentimes that means getting something that's going to be transformational for time, because it felt like the market was very hot and over too many buyers overpaying for too much
yeah.
property. The last few years before about 18 months ago when everything kind of shifted with interest rates. But what is your thoughts on that? Just having a mindset with those, connecting those threes together?
Yeah, I think that's fantastic. I mean, obviously hit on that. Like that's an easy one right now because, anybody who's struggling, that's why they're struggling is because of the debt situation. Nobody predicted it. And people could say, looking back right now, everybody's super smart. They can say, well, how could you have predicted that? We all knew it was going to go up. Yeah, every single expert said it was going to go up, but by like 200 to 300 basis points, not 500 basis points. Everybody said it was going to go up, but it would take several years, not like a couple months. Um, so, so nobody predicted it, but I think, yeah, absolutely, you need to look at your debt flow, definitely your cash flow, right? That's huge. And then your taxes for sure. I mean, we have to figure out ways to mitigate taxes, take advantage of the situation, the favors that have been done for real estate, right? And so, yeah, all three of those marry it up really well together. And if we set ourselves up on all three of those fronts, not again, not that we can't still have risk and lose, but we've got a lot better opportunity to be, long term sustainable.
100%. Yeah. And it's part of why we love the deferred sales trust, Todd. And I wonder
Mhm.
what you think about this. This is the strategy where we feel like it's one of the few that connect all three of these and give you what's called time back, right? Time to actually look and say, whoa, things are getting overheated. I may
Yep.
not want to pay that, 3 to 4 cap on not a lot of rental increases about this one, right? And oh, I may not want to take on that, 75% LTV deal, right? I might want to back it off. Or I might want to
Mhm.
sit on the sidelines for a while. Our story was the 2008 crash. We got humbled really fast when our friends, family, and clients lost half or everything was at Marcus and Millichap. And we saw the detriment of not having these three aligned, right? And basically seeing people doing these 1031 exchanges and overpaying for properties and chasing deals that otherwise they wouldn't have paid for or bought if it wasn't for that capital gains tax, right? Which seemed to
Yep.
be the thing that was just pushing them forward to do a deal rather than getting out of debt, getting diversified, getting liquid, and waiting for the real estate industry, which typically takes a couple years to shift, right? Stock
Yes.
market tends to go within a couple months, 6 months, perhaps high to low, and then it maybe take a little while to get back up to the high to low, but then from getting all the way back up, maybe a year or so, maybe 12, 18 months. Real estate, it took 3 years from the '08 crash, right?
At
'08
least.
to '11 was the very bottom, right? And so having something that can give you the tax deferral, the timing, and get not having to force debt is where we found what we called it's called the deferred sales trust, a way to defer capital gains taxes. By the way, it also works for cryptocurrency, business exits, other real estate exits to defer that tax. And then you can invest right back into multifamily syndications with groups like yourself, right? And what you guys are doing. So when you hear that, I'm just curious, what comes to mind, Todd? Obviously we're biased. We love what we do and what it is, but what comes to mind when you hear that? Because you've been in the industry for a long time. You guys have done a lot of business.
Yeah, I mean, I think you always need to look at your exit plan. There's a lot of different opportunities out there, and there's a lot of reasons to sell properties, to hold properties. So I think having different tools in your toolbox is, I mean, that's what you need to have. That's another risk mitigation. Talking about, you know, kind of trying to control the highs and the lows a little bit. Understanding, look, we can refinance this property, we can sell this property in 1031 exchange, we can DST, which is also 1031 exchange, but we can take the cash and just take our chips off the table, pay the taxes, hold for a while. I mean, there's a lot of different strategies out there, and I think understanding how those strategies kind of play together, you have to understand it. And I love that you said that these people, talking about a lot of people taking in 1031ing into properties that they were overpaying for, because that is a crazy thing in my opinion. And a lot of people do it because they want to they want a 1031 because they don't want to pay the taxes, which I get. Fully understand that. But they go and buy this property that they should have no business of paying that much for, or buying. It's not good location, whatever it might be, because they have to rush and get into something because they got that short little time period, and then they end up kind of screwing themselves over because of it.
Yeah, I couldn't agree with you more. We call that the shotgun wedding, and it's the reason we started our company. And yeah, no one likes to get married quickly in a forced marriage, right? And
Yeah,
that's the problem with the 1031 exchange. By the way, I do want to clarify for our listeners that there's two different DSTs. Okay, so there's what's called a Delaware statutory trust, which Todd is correct. That's a form of a 1031. It's basically a 1031 into like a mini syndication.
yeah,
You have no liquidity, no diversification, no control. The timing is typically 5 to 7 to 10 year
yeah.
holds, and they're very expensive, huge fees. And as an entrepreneur or someone who wants value add real estate, those are the worst things for that, right? Even if I'm a passive investor entrepreneur, right? Whereas what we offer is called the deferred sales trust. By the way, we'll still do the Delawares. We'll help people with that. They do have their place, and there's a part of that of your tool belt for that. Typically, debt over basis issues. What we offer is called a deferred sales trust. What's beautiful about this, there's no timing restrictions, no debt replacement requirement, no like kind exchange requirement, works for any asset of any kind, and you can get time back on your side. And so what we've been doing, Todd, the last 2 years, just to give you an idea, because we were one of the ones who were saying, don't buy. Like,
Yeah.
we didn't know the interest rates were going to go where they went. We were saying, don't overpay. Like,
Yeah.
don't let the tax tail wag the investment dog. Go into a deferred sales trust, which we did. We got our clients out of debt. In fact, we did a $13 million exit for a client in San Diego, and they had bought and built a $4 million car wash and sold it for 13 million. Okay, they crushed it. Now this is about 2 years ago, and they're looking for 1031. Like, Brett, this doesn't make any sense. I'm like, I know it doesn't. Let's go into a deferred sales trust, and then we put it into a multifamily lending fund. Okay, not
Mhm.
like kind, all tax deferred, making about 10%. And guess what's happened now? Now the market's it's just starting to, there's the cracks are in the market. We're seeing
Yep.
opportunities. And now
Yep.
we're going to buy back into these real estate deals, Todd, all tax deferred with a new
Yep.
depreciation schedule. And so this is called a deferred sales trust. And we think this is the Netflix to the old Blockbuster 1031, the old Blockbuster Delaware DST, and it can help a lot of people. Any thoughts on that, Todd?
Yeah. Look, it's a perfect example of another tool in your tool belt, right? Exactly what we were talking about. And it, how much better of a thing can you get if the the problem with the 1031, and I've done a couple of them, and I've also tried to do a couple of them and just haven't done them because I'm not going to go buy a crappy deal. And that's the problem with it, is that it's short term. Like, you got to get something quickly. If you haven't lined it up, you have to go get something really quickly. And like you said, it's like a shotgun wedding. Like, you just show up and that's the person you're going to marry. Like, I don't know about that. So yeah, anytime you can, and this, your example allows that person, and timing the market's hard, right? So you always talk about timing the market versus timing the market. But if there's no good deal and there's another opportunity to say, hey, let's place our money here for a little while we kind of watch and see the market, look for opportunities. I mean, that's exactly what you want. You want time on your side in real estate.
Absolutely. And that's why we're talking about navigating the real estate highs and lows and how to actually do that in a tax efficient way. And that's what using the deferred sales trust. We also just unlocked, or we just released the best 1031 exit plan. And hopefully this will unlock your ability to do a 1031. And in case it fails, have a backup plan.
Right.
I'm watching Masters of the Air, Todd. It just came out on Apple TV, and it's the World War II guys that went on these, they're the bombers, right? And these guys dive out of the bottom of the thing when the plane starts to just basically disintegrate, and all the people are shooting at them, all the Nazis are shooting at them, right? It's crazy. So they're flying, and then you dive out last minute. Well, that's what the best 1031 exit plan offers. It offers the ability to go for your 1031, and if you're like, wait, this isn't looking good, I can dive out and save it. You need to have a strategy and a team to help you with that. We can. We want to, and we
Yep.
love the opportunity. Go to experttaxsecrets.com for that, experttaxsecrets.com. Todd, that being said, what is your take on just the overall opportunities, right? You guys own and manage, I think over $500 million worth of properties, 12 different states, close to 5,000 units. So what is your overall, just temperature, right? Like
Yeah.
what are you seeing? What are you buying? Are you closing anything right now? Anything you're raising for? Talk about that, Todd.
Yeah, I mean, the market's shifted significantly, but the issue is, so maybe we've seen, it depends on the market you're in, but the markets we're in, we've seen anywhere between 20 and up to 30% price declines. But the problem is we're still not there, and with the interest rates where they're at, it's still difficult to make deals pencil out. Of course, as a seller, like, you don't want to sell the property for less than what you need to, so you're going to hold on unless you absolutely can't hold on anymore. And for the most part, people can. Lenders are working with buyers, and there's a little bit of distress in the market, but, or owners, I should say. There's a little distress in the market, but for the most part, it's just not there yet. I'm not saying it's going to happen. I'm not saying it's not going to happen. I think there's a chance that we'll see some distress. I don't think it's going to be 2008 type of distress. How that will play out in the market is going to be interesting to see. So I think 2024, 2025 are going to be two very interesting years. You've got a lot of building happening. You've got a lot of expense growth that's happened. You've got no rent growth. In fact, rent decline in a lot of markets. And so, how's that all going to play out? It's obviously putting pressure on the NOI, which puts pressure on the value. And then you add in the interest rates that are high and sustaining the heightened amount. And you've got kind of this perfect storm that's playing out right now. But as we've talked about, real estate is slow. You've mentioned 2008. Well, maybe the bottom was around 11 or 12 or so, but it didn't get back to 2008 levels until like depends on your market, but between 16 and 18, depending on your market. So real estate is just slow moving, and I think we're not out of the woods yet. So we're not buying yet. We are looking. We are wanting to buy, but we're buying, properties that cash flow right now, and we can get long-term debt and hold through. If the market does continue to go down, we can hold through it. So I'm expecting the market still goes down an additional 10 to 20%, maybe more.
Yeah, I'm with you, Todd. And I think 2024 is going to be the best buying opportunity. It's probably the latter half, right, of
Yeah.
2024. And then yeah, we'll see what 2025 holds. But it's interesting. It's hard to predict. But I'm seeing the pain. I'm seeing the capital calls. I'm seeing the struggles. The question will be, will those things actually hit the market? Will people just buy them off market? Will they just bring in, capital to fund the deal off market? We don't even know.
All of that.
Dilute people's shares. Go ahead. Yeah.
Well, all of that puts pressure on sales prices, though. Anytime capital is going into rescue deals, anything like that. The only thing that wouldn't really change the market too much, and it probably would still, is that if banks are just, lenders are just writing down debt, but then they're less likely to lend, and so then the lending environment is a little more difficult. So anytime money is being placed in deals to save deals, they're getting sold off market. That is taking buyers out of the market, aggressive buyers out of the market, and so it causes values to go down.
Yep, I agree with you. All of it plays into one another. That being said, Todd, we're running out of time. You ready for the lightning round?
Let's go.
All right. Knowing what you know now, if you go back to your 25-year-old self, what's one little nugget, and make sure you tell yourself to do?
I go bigger, faster.
Awesome. Question number 2: what's the number one book you've recommended or gifted the most in the past year?
Yeah, probably the book I recommend the most is How to Win Friends and Influence People. I think it's a fantastic, easy read.
Excellent. Next question. What are you most curious about right now?
Boy, man, so many things. I guess thing I've been probably paying attention to most or researching the most is just more macroeconomics and kind of how money flows and how how everything kind of works together.
Yep. I like it. Next question. What's your number one leadership quote or theme that you strive to live by?
I love Mike Tyson's quote, and I'm going to probably butcher it, but he says something about everybody has a plan until he gets punched in the face. I think it's punched in the mouth. But yeah, he's a great philosopher.
It's one of my favorites too. God, yeah, we use that one. Everyone thinks they can get the 1031 exchange, and get it all lined up until they get punched in the mouth, right?
Yeah.
With a bad deal or bad opportunity that they thought was something else. What's the number one way you use Chat GPT?
What I don't actually use it a ton. I probably should get better at just recognizing its ability. But writing blogs, and when I write blogs, I'll use ChatGPT and then go in and obviously edit and move things around and make it my own. But that's a great way to. Also for like podcast solo episodes, I'll like throw in a thought idea and it'll give me a ton of bullet points and a ton of things to like talk about, noodle on, and so yeah, both of those.
Absolutely love it. Last question. After all your help, after all your success, helping all the people you've helped build the business you built with your partners and helping people create and preserve more wealth, how do you best stay centered in your values and stay encouraged to charge forward to reach even higher heights?
Yeah, I mean, look, but I'm a man of faith, and so I'm a Christian, and I guess I just believe in Christian values, and I think that's who we are, and who we show the world is important. And so yeah, I just staying centered with God and praying, and every morning I wake up and I pray, and before I go to bed I pray and read the Bible. Although I'd like to read it more, but read the Bible, go to church, those types of things, and just uh, it's an important part of my life, the most important part of my life. So
Amazing. Todd, I want to thank you for that. And amen to that. Todd Dexheimer, everybody. I want to encourage everyone to get with Todd. Go to enduruscapital.com, enduruscapital.com. And I also want to thank all of our listeners for listening to another episode of the Capital Gains Tax Solutions Podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the deferred sales trust, is an amazing way for you to eliminate the frustrations with the 1031 exchange, defer capital gains taxes on any asset, crypto, businesses, real estate, and then be able to invest with groups like Endurus Capital, right, to diversify that wealth, to get cash flow and a diversified, proven multifamily syndication group like Todd and his team at Endurus Capital, to grow the wealth as well. And so you can check me out by going to capitalgainstaxsolutions.com. You can check Todd out by going to enduruscapital.com. Appreciate everyone listening today. Please rate, review, subscribe, and please leave us any kind of reviews that could help as well.